Meanwhile, in China, Southern Airlines, the country's biggest carrier, soared to its highest level since 2008 in Hong Kong today after announcing a $1.6 billion stock sale. We partner with the FT to bring you Lex on Bloomberg so you can get a sneak peek at the Financial Times flagship column a day early. Ben McLannahan joins us now live from Hong Kong. Ben, it's not every day that you see, good morning to you, a stock resumed trading after a suspension, a capital raise, and then a big move higher. What's the deal?
That's right. Yeah, China Southern, which is the biggest of China's state-owned airlines, took itself off the market for 2 weeks, and then meantime announced a big capital raising last night in Hong Kong, and then on trading this morning it was up about 11%. It finished down, you can see behind me, about 7 or 8%, but that's still a phenomenal achievement for a notionally distressed company raising capital.
What does the capital raise tell us about the differences today between Chinese airlines versus a few years ago?
I think what it tells us primarily is that the state is right behind its big three. That's China Southern, China Eastern, which dominates in Shanghai, and Air China, which is the international flag carrier. And China Southern is down in Guangzhou. And China is determined, like the US, to develop a domestic infrastructure dominated by three big airlines. And so to that extent, it's prepared to commit as much capital as necessary to achieve that. And over the past few years, it's really turned a blind eye as these big three have got bigger and bigger, leveraging up more and more, spending more on wasteful capacity additions and so on. And that really came to a head a couple of years ago when there was the crunch, there was a collapse in domestic demand, a collapse in international demand, which really hit Air China and its cargo business in particular. And at that point, they said, no, enough is enough. And on top of that, there was the derivatives scandal, where lots of them lost a lot of money through misplaced fuel hedges. So all that came to a head, and lots of the managers now are on yellow cards. This is their final warning. And now they're still raising capital, but the rest of the business is looking much better.
And Ben, before we go, the Financial Times has been reporting on the consolidation and more to come potentially from these airlines.
That's right. This is the really important point. Up until last July, they'd really resisted forced consolidation. There was too many entrenched interests to overcome. And now the civil aviation regulator, an ex-Air China chairman, has really been forcing the issue. And we saw one last year with Air China merging with Shanghai Airlines, its local rival. Since then, we've had Cathay Pacific merging its cargo operations in Shanghai with Air China. And also Air China is having a good go at Shenzhen Air, which is the #5 carrier down in the south, to create a proper rivalry in that area with China Southern.
All right, Ben, thanks for the latest on the Chinese airline space. Ben McLannahan of the Financial Times.